Welcome everyone, Jason Paetow here from AllianceCorp. I've got a quick video for you, and the purpose behind this, I've got to bring you some good news. There's not a lot of good news out there, but it is out there. The other thing to consider too is this has also created a lot of investment opportunities for the savvy investor. So the first thing we're going to have a look at in the video is we're going to be focusing on that's not all doom and gloom. We'll run through some positive stuff. We'll have a look at how this has impacted our economy, our property market. What are these investment opportunities that you're talking about? How can Aussies help? And also how can we learn some more about these opportunities? Now, firstly, I don't want to underestimate the seriousness of what we're facing, right? We need to take precautions. We need to follow those government guidelines. But at the same time, you need to be mindful of the information that's being presented to you by the media. Because let's face it, they sensationalize everything, okay? So very rarely will they report on best case scenarios. It's always worst case scenarios, which just leads to more fear and panic. We know this very well in our industry because we see it all the time with regards to how our property markets are performing. If you have a look at the screen right now, what you'll see is a graph where if you look back over the last 10 years, a lot of the media were talking about some significant property crashes or downturns. You can see there anywhere between 30 to 40%. And every time these news reports came out, guess what happened? The property markets actually went up. So this is quite common, guys. So I just want to be mindful and remind you that there is positive news out there. So let's have a look at some of those positive reports. So one of the first things that you'll notice in the next week or two is that those supermarket shelves, they're going to be restocked, all right, due to the restrictions on what you can now buy. And also on the fact that, that our supply chains are catching up, those shelves are going to be restocked. And don't worry about food production. Australia has the capacity to feed 130 million people. The other thing to consider too is having a look at what other countries are doing and how they're coping. If you have a look at China, they've got 1.5 billion people. All right, and they've already got this under control. On top of that, South Korea has 50 million people. They also have this under control, as you can see from the graphs there. Also, too, human trials are underway for a vaccine, so it's not too much longer before we will have a vaccine, possibly in the next 12 months. But also, too, there's been some positive studies there showing that a commonly widely available malaria drug can also produce some amazing treatment for people that are currently infected. So click on the links to read about those stories. Now, also, too, the government is investing heavily in the economy with a 189 billion stimulus package. Just recently, you may have heard that the banks now are also chipping in and supporting small business. They're supporting individuals that may have lost their job. They're prepared to look at ensuring that you don't default on any loans. Basically, they're going to look at putting a halt to those repayments on your mortgages and business loans, etc., until we get through this. So guys, there is positive news out there. You just got to look a little bit harder for it. We're going to continue to bring it to you on our websites and through our emails. Now let's have a look at what's happening in the economy. Well, look, the health of our economy is dependent on the balance of supply and demand for our goods and services, which is currently impacted. But this is a supply chain issue, not common drivers that can lead to a slowing economy, such as geopolitical causes, natural disasters, overstimulus, and consumer confidence. In this instance, we have a short-term shortage of demand, be it consumers, and a supply chain issue with regards to our workers. But this is because of our social distancing measures. This is to do with the virus, people not being able to go to work or people not wanting to travel or go out and enjoy themselves because they're trying to prevent themselves from catching this virus. So all this uncertainty is also leading to lower consumer confidence. But this is only short term. As you can see from the graph by Shane Oliver, who's AMP's chief economist, he explains that we're looking at three scenarios. Now, number one on the graph there, you'll see the green line represents the economy prior to the virus, so not a lot happening there. The second line there, the blue line, is showing us that we're looking at a mild downturn throughout March and June, but then a recovery once China comes back into the market and their production comes back into the market in the second quarter. The black line shows worst case scenario, where we're looking at deeper downturns throughout March and June, but again, life is returning back to normal in the second part of this year. So my point being is that yes, there are going to be changes in the economy, but the quick action and the government implementation of our stimulus packages and other programs through industry and the banks also assisting us, it's unlikely that most Australians will be significantly financially impacted in the long term. Certainly people that might work in the travel industry, hospitality, entertainment, and to a lesser degree retail, yes, but there are some stimulus packages there to help, and also too, as I mentioned, the bank is also going to help us out as well. So this will only be short term, and for the most part, most people will not be impacted. Okay, so what does this mean for our property markets? Well, look, there's no doubt that consumer confidence now will push down those clearance rates, right? A lot of people now, in terms of jumping into the property market, might be sitting on the fence. But that is really good news for the rest of us buyers in the marketplace, because it provides less competition. The market will now become what we refer to as a buyer's market, where just previously it was a seller's market. So when we're in a buyer's market, what that actually means is that we can actually go and negotiate better prices on our properties. We can negotiate better deals with builders or developers. But this is only short-lived, all right? Because as soon as this passes, all the buyers are going to flood back into the market. And the reason for that is the fundamentals to our property market is very strong. Nobody will disagree with the fact that we have a very strong population here in Australia. We have record low interest rates. The first home buyers are back. We have a declining housing supply. The vacancy rates are tightening up, and 70% of all property owners out there are homeowners, all right? Now, a homeowner doesn't just rush out and sell their property. So as you can see from the graph, if we go back over history, the property market is incredibly resilient. It doesn't matter whether we're looking at recessions, terrorist attacks, other viruses such as the swine flu. As you can see from the graph there, going back roughly 70 years, our markets have always been consistent, with the view that you're not looking to buy and sell within a short period. This is a strategy to buy and hold your properties long term. Now, this might come to odds with what you sort of experienced with the share market at the moment. You can see there now on your screen, we've got a graph going back to 2005 and showing the volatility in the share market, all right? It's very volatile. You can buy and sell your shares daily. But as you can see from the yellow line there, again, property is resilient. We don't have those significant corrections up and down. Now, some of you might be concerned about a recession, or what we refer to as a technical recession. If you are concerned about that, well, let's just go back and have a look at our last recession. As you can see there, back in 1991, there's the graph. We had our recession, our last recession. It went for 12 months. And as you can see, the property market was not impacted at all. It's quite the opposite. As you can see, most major capital cities, the values increased in value. All right, so again, even through recessions, our property markets are very resilient. So the point I'm trying to make is that what this has created for us in the short term is a buying opportunity. It's now a buyer's market, but it will only be short-lived. As soon as we see the number of cases here in Australia on the decline, which won't be for another couple of months yet, but as soon as that starts to happen, all of a sudden you'll see all the buyers rushing back into the market. So this will only be short-lived, but get out there, guys, get some more information, because there's some great opportunities, which I'll show you shortly. Okay, so what are some of these investment opportunities we've been talking about? Look, I'm not going to play into this hysteria. I'm out there looking for great opportunities for my client. We know it's now a buyer's market. We know that we can negotiate better deals. Even a 5% discount on your property can amount to $20,000 or $30,000 in your pocket. We understand the impact of low interest rates, but what about the impact to your cash flows on these properties? A lot of these properties now that would normally be either neutrally geared or a little bit negatively geared in terms of their cash flows are now generating positive cash flows, which we'll have a look at in a moment. Also, a lowering interest rate also does wonders for your borrowing capacity. Some of you may have been ready to purchase your next property, but your borrowing capacity was too low. Now with the lowering interest rates, you go back to the bank now, your borrowing capacity is higher, which then enables you to get back into the market. And if you're thinking about the market, it makes sense to think about Brisbane. And the reason for that is the net interstate migration for Brisbane is much higher than other states. The reason for that, as you can see from your graph, is that the properties are so much more affordable. You're looking at a median price of mid-fives, where if you have a look at Sydney, you're looking closer to $1 million. The yields are also much higher, you're closer to 4 to 5%, whereas the rental income and the yields in Melbourne, for example, on houses is as little as 2 or 3%. Supply is tightening also. If you have a look at the graph there, the red line represents dwelling completions on the decline, and the blue line is that underlying demand, which again pushes competition for those properties. If you're having a look at an example of a property here, here's a townhouse. Now this townhouse is 3 bedroom, 2 bath, 2 car, and it's only 12 kilometres northeast of Brisbane. So very much in those established metro areas. The rental income on this, would you believe, is $520 a week. With a 10% deposit and interest rates being 3%, you will take home cash flow positive income each week of about $150. When the interest rates continue to drop, in line with some of the announcements made by the Reserve Bank, a 2% interest rate could mean that you're looking at $210 a week. Now that's almost $11,000 a year just from your investment property. And if you look at negotiating on something like that now, as I mentioned before, look at some discounts, or if it's something that's off the plan, you might negotiate some better upgrades or extras on your property. If you're looking to get into the market, all right, and you have a lower budget, well, you can also look at a townhouse that are 2 bedroom, 2 bath, 2 car. These ones are 20 kilometres south of Brisbane, okay? These ones will rent for $360 a week. On a 10% deposit, on a 3% interest rate, again, you're looking at $135 a week, cash flow positive, so that's again in established areas in Brisbane. And also on a 2% interest rate, you're looking at $170, which is close to $10,000 a year additional income for yourself. Now, of course, what I would be recommending is a lot of you also look to lock in these rates, whether it's 2, 3, or even up to 5 years. By locking in that cash flow positive income, that will give you a lot of confidence with regards to your current lifestyle and what's happening in the world. So my point being is there's some great opportunities out there, guys, but you've got to focus on some of the positives that can come out of this unfortunate situation, but it's only short-lived. As soon as the buyers start flooding back into the market, it then becomes a seller's market, and a lot of these opportunities potentially won't be there. Okay, so how can we all pitch in as Aussies and help? What can we do moving forward? Well, one of the first things is don't panic, all right? This will pass, there's plenty of good news, and we'll keep bringing that good news to you as we come across it. The other thing to consider is that you need to be following those government guidelines, right? You need to be practicing social spacing and wash your hands, wash down your surfaces. There's a lot that we can be doing as individuals. The number one big thing that I want you to focus on is help with stimulating that economy, all right? We need to keep spending. I understand you might not be able to go out to your local restaurant, so pick up the phone, jump online and order from them. Get some takeaway sent to your home. If you're not going to go into the shopping centres, I get it, but jump on their website, support the local retail industry. If you're a recipient of the stimulus package, make sure you spend that money. Make sure you put that money back into the economy. These are all the things that we can do as individuals to support our country. Because at the end of the day, guys, it's not the end of the world. This will pass. And while it is unfortunate, it has created some amazing opportunities for savvy investors out there. So if this is something that you want to have a closer look at, what I encourage you to do is to book in for one of our complimentary property and finance coaching sessions. Now these sessions are valued at $500, they're complimentary. It gives you roughly 90 minutes with one of our expert head coaches who will sit down with you and have a look at what's happening around the markets, talk to you about some of these opportunities, run you through some of those cash flows that can now be generated, which will certainly give you an advantage in the marketplace. Now also keep an eye out for these emails. We're going to keep putting some of the more, as we come across more positive news, we'll put it on the website. But guys, that's my job. My job is to help you balance out some of that negative information. There's too much of it. There is some positive stuff. That's going to be my focus with the videos. I hope you enjoyed this video. And most importantly, get educated. If you're freaking out, book yourself into one of these sessions and the guys can run through some of those amazing property investment opportunities for you. Thank you.